What are the current drivers for the moves into gold, and do you see that being sustained?
I think the number of factors that have led this gold rally, part of them were laid back in 2022 when we saw that central bank buying really pick up. And that's been a core driver that's sustained this rally. That downside's been very well supported. But the big shift that we've seen over the past 3 months has been the inflow of ETFs. That was largely absent if you look at most of the 2024 rally, but that's really provided that additional catalyst coming into this year. But what's made the rally sustainable, it took 5 years to get above 2,000 on a sustained basis, but only a matter of weeks to stay above $3,000 on a sustained basis, is the fact that there are so many different drivers behind this rally. It's not that traditional correlation with real yields. It's been concerns around recession risks, concerns around tariffs and whether we see trade wars. It's been concerns around geopolitical tensions. So there's so many different drivers behind this rally that it's kept gold prices elevated.
And despite the run-up that we've seen in the last 12 months, 40%, this is not looking overcrowded at this point?
This is an interesting factor because when you look at a chart, it looks like it's quite toppy, and there's lots of concerns that price action has been quite frothy. But when we look at some of those measures that we can actually look at, they're not overcrowded. So tactical positioning, we're at lows that we saw back in February 2024. So the highs for the tactical positioning was back in 2019. So we're not overcrowded there. If we look at ETF flows, we're around about 400 tons off the peak that we saw back in 2020. So even now, when we look at inflows, yes, they've picked up across the US and Europe, but those new inflows are actually coming from China. And I think that's what's making this rally different, is that we've got additional demand here, and it's new demand as well.
OK, and you point to a number of catalysts. I just want to pick out one, which you point to starting back in 2022, which was central bank buying in significant quantities. What is your understanding of how much further that has to run? To what extent is that a structural change now in terms of the buying of central banks globally?
It has been because it's not just one central bank, it's not just one region. And we've seen multiple central banks coming into space, citing different reasons why they're adding to gold. Some may be looking for a target allocation, but others may be looking for diversification. It may be strategic. So the fact that we've continued to see this buying, yes, some of those volumes have been scaled back over the past quarter or so as prices have scaled record highs, but that buying is still there.
We're at 3,337 right now per troy ounce. What level are you targeting by year-end for gold?
We think that there's a number of factors that could start to dampen gold rally by the end of the year. Firstly, if you're looking at the correlation here, it's weakened with real yields, but it's strengthened with the dollar. So we're seeing that gold has been a huge beneficiary of safe haven demand amid a lot of the uncertainty. But as we're going into the end of the year, we think that if we see rate cuts, that could be a surprise that lifts gold up again. But if we start to see tax stimulus measures in the US, and we start to see some of the uncertainty around geopolitical risks starting to unwind, we could actually see gold starting to stabilise at elevated levels. So remaining above 3,000, but perhaps potentially past its peak by the end of the year.